And YouTube is giving me an error, so I'll kill that. And I'll kill that. And then we'll do this. And then you're like, wait, I can't see anything. I'm getting there. And then how come that won't go to the other thing? Picture in picture. Picture in picture. Continue watching while you navigate. What? Is it because I'm full screen? This is supposed to go under. No. Hang on, I'm almost there. Now we got someone with a hot mic. Week 5, AI. All right, I think I'm. Hang on. And I got Bloomberg running in the background. My gosh, everything's got great. What the heck? There we go. Got rid of that. All right, let's see. Do you have charts or at least a platform? Do you see the platform? Do you hear me? Yeah. How we doing? Let me see. I mean, there was another technical problem with YouTube today, so I had to report it. And so I think I'm manually streaming. So I'm doing 2 streams at once. Yes, I am. That's why this is discombobulated. All right. So wait, what do you guys see? Oh no. Okay. Sharing the wrong screen. Let's see why it's doing that. It's on some weird. Oh man, this is going to be complicated. Why is it showing the wrong screen? Now if display capture. Display capture. There you go. All right. So I think both streams see the same thing. Yay! I think we got it. Okay. I can work with that. I'm going to ask. Yeah, thank you. Now, this is not supposed to be so hugely full screen, my camera. Like, my camera's not that important. And yesterday, it was interesting. There was a setting for me to make it small and over here, out of the way, and now it won't do it. Start picture in picture. Is that better? No, it doesn't really hide this. Can I hide? I don't know. What a weird world. Will put me over there? But why would they build a feature of showing me toys? Anyways, I need to ask permission. Please give me 1 more minute. I spent the last too much time just trying to get this up and running and reporting everything, royalty free, quiet classical music in the background. Give me 1 more minute. And the mic is on. All right, give me 1 more minute. Sorry. Thank you. Sorry. it's running. Looks like everything is fine. I can live with all of this. Yeah. All right. Yeah. All right. Welcome to Forex.Today, the YouTube community. Of more than 22,000 foreign exchange traders, or about 22,000. We gather here today to conduct technical and fundamental analysis with the overriding goal of planning our trades in advance. Because trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. Our goal here is to have a solid pre-trading routine. We're trying to do a few things. We're trying to read the market. We are trying to acquire legal and ethical inside information about institutional investors. Ideally, we're aligning our trades, not just with short-term market conditions, but also medium and longer-term institutional flows. But we're also trying to build conviction and confidence in our ability to put together logical, intelligent trade plans. Because I think we all agree, if you don't have the confidence, you're less likely to make the trade. Don't you stink? Don't you stink? Yeah. So let's start with getting an update from Aiden on what's been happening. This is as of 8:05. So this is his report about 10 minutes ago?
Good morning. Here is a breakdown of the cross-asset flows currently shaping the session. Today is a fade the rally session because the sharp 2.79% slide in the Nikkei 225 and a rising VIX indicate that recent optimism is hitting a wall of technical exhaustion and geopolitical concern. Right now, sentiment is flat to neutral, marking a notable departure from the decisive risk-on tone established over the last 7 days. The U.S. 10-year yield has retreated to 4.545%, reflecting a bid for safety as volatility spikes, while the British pound remains surprisingly resilient despite slowing domestic growth projections. 1. UK GDP growth grew by a marginal 0.1%, while a separate report showed the 3-month growth estimate slowed down to 0.4%. Brazil's retail sales came in at 0.1%, which was lower than the 0.5% that experts predicted. Gold and silver are both losing ground because persistent inflation from high energy costs makes it likely that interest rates will stay higher for longer. Bitcoin's recovery has stalled as traders weigh geopolitical tensions against cooling inflation data. Biggest movers right now, Nikkei 225 is down, corn, VIX, platinum, and Hang Seng are up.
Yeah, I did do stage 2 of making my mushroom coffee. I think it's 13 different mushrooms. Oh my goodness. What am I doing to myself? It's supposed to be good. Yeah, it's supposed to be good. Desire. So, what are we looking at risk wise? And still about neutral. I'm surprised how, for example, war for now, what, I don't know, what has it been, 3, 4 months? It hasn't dragged the stock market down 20, 30%. Oil prices on the way back to 100. Stock market hasn't dropped 30%. So it's interesting. The resiliency, and it might just because people invest now in the stock market differently than when they did 20, 30 years ago. You don't walk down to your financial advisor and drop off a check for investing. And meanwhile, you cut some coupons off the side of a bond and say, hey, give me some cash back. you know, 50 bucks goes out of your paycheck every 2 weeks, and it gets put into you know some mutual fund somewhere. You know that's it, and maybe so that just keeps it. The flows come in no matter what, good, bad, ugly. It doesn't matter. You don't even know what you're invested into. You know what I mean? So, good, bad, ugly. Oil prices double, and the stock market doesn't care. You're like, wow, right? Hey, that's good. Look, I guess that's good. I think what you're seeing, though, if you look at what's being purchased, I think that's changing. The dispersion, the breadth is what they call that. So at one point it was all like Mag 7, and now I think we're treading water, but people are saying, look, I'm up 100% on my Mag 7 stuff. I don't think it's going to go up another 100% soon. And I'm worried about a pullback. And so if I'm up 100, it's going to drop 30, 40 before it goes back up 300, right? And so people are like, maybe I should buy more S&P 500. I don't know. This is a decision. And I have to do this for my charitable endowments as well. Like, where do we hide out? And I actually made that decision for one of the endowments yesterday. Where do we hide out? Do we hedge? Do we hide? Do we rotate? How are we going to rebalance? And so you're like, well, do we move money to the Dow? Do we move money to the S&P 500? Do we sell some of our NASDAQ, or do you just hold the same amount and take and allocate new capital somewhere else? Or do you sell some NASDAQ and move that capital somewhere else? Rotate, right? And is it Dow or is it Russell 2000? And see, and I heard an expert this morning, and that's why it's on my mind. She was talking about, she's like, yeah, even the Russell, even small caps. And I'm like, whoa, 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 whoa. Settle down. Small caps. But the Fed market, okay, the Fed funds futures market, the Treasury curve. See, she's an equities person, so she probably doesn't look at the yield curve. So I'm like, hey, the yield curve is pricing in a hike, maybe two in the next year. We know this. Now, we also have our belief system of the likelihood of it actually happening, which is irrelevant. We track price, not theory, conjecture, and opinion. We track reality. And the reality is it is being priced in. So would you buy small cap in a regime like that? So her sales pitch was, hey, Mag 7's too risky, so maybe you should rotate and put some money into small caps because it's the opposite of Mag 7. So maybe we'll call that diversification, right? Which is a financial advisor's way of saying they have no idea what the hell they're talking about. Market timing, diversification. When they say that, if you have a financial advisor and you're having a meeting with them and they're like, diversification doesn't mean buy a whole bunch of crap. That's not what diversification is. Lots of stuff in the portfolio, not diversification. Hang on, let me grab that mushroom coffee. See, the benefit of having a small head is it makes your coffee cups look ginormous. How does he fit that brain in such a tiny, weird, odd-shaped head? I don't know. Okay, so anyways, the reason we talk about this, is this is what's going on in Wall Street's brain. So you're like, hey, Wayne, we got retail sales. Let's flip some trades. Well, that's not actually what the market is thinking about at the moment, but it is about to happen, and it is important news. Yep. Is it going to change monetary policy anytime soon? Well, we're concerned about September, right? The September 12th meeting? Yeah, okay. Yeah. But we can get the yield curve data. We can get all the other data. We can get all of this soon. We don't have to freak out too much. But what you probably already know, many of you got emails. We're right. If like with the Dow, for example, could move. Okay, we have direction and magnitude based on retail sales. So if it beats, okay, Dow goes up. If it misses, Dow goes down. Wait. If it beats up, meets down, misses up. Yeah, Wayne, that doesn't make sense. Yeah, it's not supposed to make sense. It's supposed to be data. It's just what's happened. Yeah. So Nazi could be an interesting play as well. Let's say you're trading euro dollar. If it meets, it's going to jump, or it has the probability or capability of jumping 13. Pound dollar's a little less. So euro dollar is the best way to play it if you're doing Forex. And a beat, okay, and a miss don't really produce any opportunity or threat, but no opportunity. So we're looking for a meet, maybe, huh? It's kind of cool to have the data, right? Yeah. What do you think? That's pretty cool, huh? Yeah, dude. Look, there. We even show you how we do our calculations, right? Why? Because we can't. I think we're about. Oh, we're about there, getting there. Pretty soon, everybody's got one with the red guitar on fire. 30 seconds, my friend, on how it's only what has happened in the past. And what I'm trying to show you is it's economically important, but it hasn't really produced that much. But if you were going to trade, yeah, a little euro dollars, okay, but you're better on trading the stock market, or that kind of stuff. But I think Warsh is speaking today, and I think we still got geopolitics. That President Trump is speaking today on TV to the nation. There's a lot of stuff that could just hold this up right now. Remember, you're not trading Forex like you did 2 months ago. This is a completely different trading regime based on seasonality. So don't be overly aggressive, right? Does yeah, like even here, it's like, yeah, maybe 5 pips, bro. Just looking at the control group, I don't think we really need control group stuff. What we're trying to say is, how's the U.S. consumer doing? How are they doing? Are they going to spend money? What is it? 70% of the U.S. economy is the American consumer. So it matters, doesn't it? Yeah. Now, the other thing, if you really want to get knee deep into the economic research, you're going to say, well, okay, domestic dollars versus international spending, right? Like when the dollar's strong, things at Walmart look cheap. Yeah. From your perspective, remember the theory of relativity. It's all relative to your perspective. So if your dollar's strong, you're like, damn, look at this. I got a nice shirt. It's got over 1% cotton. You never have to wash it or iron it because it's made out of nuclear waste. It's only $2 at Walmart. Cool, I'm going to buy it. Because it used to be $5. Now it's $2. And, well, it might be the value of the USD, right? And some country somewhere out in the world is receiving, 25 cents for the shirt. And it just, to an American, it's cheap because their dollar buys a lot based on the foreign exchange, the purchasing power parity of the two economies or currency valuation, however you want to describe it. But here's the interesting thing. In that process, that weakens the dollar. You're like, wait. Because the dollar's strong, foreign goods and services seem cheaper from the perspective of the American. Yes. So then they sell their dollar to buy the product or service from the foreign country, which weakens the dollar. It's almost like pure economic equilibrium. Or if you study John Nash, there can be multiple equilibrii. Yeah. Google it. Watch the movie Beautiful Mind. That's John Nash. He won the Nobel Prize in economics. He was also schizophrenic. And I still think there's a high probability I'm schizophrenic, and I'm not even streaming on YouTube right now or Insider Traders. I don't even have internet. Maybe the power's off. I'm just talking into an empty mic. And you're my invisible friends. Oh, but I like you guys. Yeah, I like you guys. Even if you're a figment of my imagination. So yeah, so we care about the retail sales. Oh, faux show. Okay. Yep. Boop 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 boo. So we'll move on.com. Let's get an update on the headlines. United States retail sales year over year declined to 6.7% in June from previous 6.9%. Probably not a
United
freak out
States
moment,
continuing
right?
jobless claims registered at 1.805 mem, below expectations, 1.82 mens in July 3rd.
United States retail sales ex autos, MOEM, below forecasts, 0.1% in June. Actual, HOD 0.2%. United States retail sales control group meets expectations, 0.5% in June. Crypto today, Bitcoin, Ethereum, XRP run into resistance as retail buying cools.
Canadian dollar, Bank of Canada, hold and guidance shift, TD Securities.
Canada housing starts S-a-day, year over year, below expectations, 258K in June, actual 239K. So we can sit on the squawk box.
European Central Bank, hawkish hold bias, Rabobank.
United Kingdom NASAR GDP estimate 3M dipped from previous 0.933% to 0% in June. Sterling today, pound dips as dollar broadly retreats. Pretty soon, everybody's got one. So this is how it's designed, by the way. You can go to this page, open it up, and then minimize it. And what it acts, the way, the benefit here is you can hear the news flow, and the news is all related to trading and investing. So you can listen to the news flow as you stare at your MT5 platform. And you're just going through charts, you're listening as the news comes in, and it's hyper focused, and that's how you use a traditional squawk box. Now, most people pay money. I used to spend. Well, I had a site license, but I think United States retail sales rise 0.2% in June to $768.6 billion. So I think TradeTheNews.com, I worked with, I had a relationship with them for, 10 years, maybe longer. And I think it was $300 a month to have a squawk box. Now, I think other groups charge less than that now. There's lots of competition. And, people still spend good money. $100 a month, $50
U.S.
a month.
initial jobless claims dropped to 208K last week.
My point here is this is part of the free account at tradears.com. You should have something like this. And this is how you use your squawk box. And squawk boxes have been around like generations. Traders use squawk boxes. And you're like, really? I didn't even know. Well, everybody's got one, right? How does it go? Over the counter with a shotgun. Pretty soon, everybody's got one. For the money, 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 money. Yeah. So anyways, there you go. So that's how you use that. Cool. We're still refining our alpha radar, just so you know. It's not perfect, but it's good. It's not perfect, but it's good, and it's going to get great. As Trump would say, greatest ever. Just ask anybody. Ask all the experts. It's fabulous. Okay, and so what this is doing is it's utilizing the neural network, the history, and the spike alerts, and Aiden is deciding like this. He's like, hey, so this come out, releases in 5 days. Okay, in 5 days. Okay, in 5 days, right before the UK jobs report, you're going to get an email to warn you before it comes out. Spike warning! It's going to email you a simple text. Okay? Yeah. If this comes out higher than expected, pound dollar could jump 24 pips. Okay. Now I notice meet and miss are the same, so that can't that's incredibly unlikely. But nonetheless, this event will move the pound somewhere between 15 and 30 pips is what it's saying. I'll see why it's anyways, it's a heads up. And so now he's going to email saying, hey, warning, the pound could move 35 pips in the next 30 minutes. So if you're in positions, you're warned about potential risk to your positions. If you're a scalper, dude, could be an opportunity, right? Right? You should know what I'm talking about? What do you stink? Smell like a plant? Right? You should know what I'm talking about? Okay. Now, you're like, okay, so you're going to get warnings, which is good. Before the event happens, because like many of you are like, yeah, I tend to miss things. Every time I find something to do, it's already happened. Well, you're not thinking forward. You're responding and reacting. So every time you see something, it's already happened. Okay? By the time you see the bus, it's already in the process of running you over. A little late. So in this case, it's like, hey, bro, heads up. Okay? But we're also going to look at different things like if there's a dramatic change in risk. So now let's say today's risk radar spikes up or spikes down. You'll be notified by email. Just so you know. You might not be at your charts. This is what I'm thinking. Because I move around. I go to the office. I do I mentor founders of local companies, and I go to events, and I do my webinars, and I'm a trader on the move. And it would be nice if I got an email and it goes pa-ching, and I look at my phone and it's like, dude, something just happened and the markets are tanking. Oh my God. I need to know. You see what I mean? So he's going to do this. But we also had, do you guys remember the score flip emails? You guys used to love them. So we are building a process to watch the fundamental scores. And if there's a dramatic change in fundamentals, so let's say a central bank raised interest rates or something, and we believe that's going to impact whether we should be a buyer or seller of that currency, the score changes dramatically. And we've seen some pretty dramatic score flips from June to July because of seasonality. He's going to watch that 24 hours a day because he's already watching it 24 hours a day, and he uses it in his own brain. But what I'm building is basically what I'm saying is, hey, Aiden, watch the economic tables. You know, the table where we're watching, dozens of different variables for every single currency pair, every single stock indice, every single we're watching all these things to create sort of a valuation projection. Well, if we see a dramatic change, email you. And then he's watching yield curves of all economies. So he's looking at the 3 months to 30-year Treasury market of the United States, of Canada, of the United Kingdom, of Europe, of Australia, New Zealand, or, as long as the country provides the data, we have it. So if we suddenly see those interest rate hikes that are currently priced in the yield curve, if suddenly one of them gets priced out or both of them gets priced out on the actual yield curve, which means institutional investors are changing their minds on the potential for the Fed to raise interest rates in the future. So suddenly, let's say they price out a 2027 hike and they push the 2026 hike from September to December. And so let's say mathematically we can see opinions changing in the yield curve as far as monetary policy in the United States. Boom! You're going to be emailed by Aiden to say, hey, look what I just noticed. I thought you should know because you're my sweet baby. Yeah. It's kind of cool, right? Would you like me to do this for you? Oh, by the way, I'm already doing it for you. So my giant orange cat is sitting on a table outside my window, heckling me. Yeah. Come on, Ginger. Shut your trap, Ginger rat. Yeah, so we got more news coming up today. Noise. Yeah. Here's I think one argument based on what today's retail sales, yesterday's PPI. The news to use here is to look for evidence now of institutional investors changing their mind on interest rates in the future. Does the Fed need to jack up interest rates if retail sales is slowing? Does the Fed need to jack up interest rates if inflation on the producer side is slowing? Now, if it's slowing on the producer side, eventually that could be passed through to the consumer side of inflation. So PPI down, CPI down in the future. There's a lag between them. But what do institutional investors think? Okay. So this is a page you could sit on as well throughout your day because you're looking at the risk. You're looking at the stock market. You're looking at VIX. Now, I was hoping to see VIX in the 15s today. Gold just kind of stuck in the mud. Bitcoin up, which is good because we're long crypto, right? I mean, every day now for 2 weeks. By the way, these are the scores. So if pound CAD, let's say, drops significantly or something like that, you'll be notified that something here has changed. And this is just a different version of this, and this is just a different version of that. So you're like, are you watching Kiwi CAD right now? Are you watching GDP, inflation, unemployment, interest rates? Are you watching the technical charts, both price and momentum and trend? Are you watching seasonality? Are you watching institutional positionings and cash flow? And then doing comparative analysis of these two economies? Yes, you are. You are doing this because you use TradeRs. Morning, RJ. Yeah. By the way, guys, if you're watching this on YouTube, what you see here is what I'm streaming inside of TradeRs in the traders room. Most people are in the training room right now. The reason we do it this way is no matter what you do with YouTube, there's inherently a lag. And it seems to be when you start streaming, it's about 20 seconds. But because we use a long format, and like today, if I go 3 hours instead of the usual hour and a half, that lag becomes minutes, many minutes. There could be a 5 or 6 minute lag at some point. And it's not me, it's YouTube. And I understand it's complex. They're ingesting all of this and they have to store it in short-term memory and then record it in long-term storage. And I don't know. I feel bad for Google. They only make $100 billion a day. There's no way they can reduce latency. Even if you're on ultra low latency, inherently we get lags that are really unacceptable at some point, especially if we're tracking the news together, So remember, TradeRs is free. Go to traders.com and register. It asks for an email address. That's it. That's the full registration process. It will take you, 2 seconds to register. And then you can join us with zero lag inside of TradeRs. Okay. It's that easy. So anyways, we'll go back to our fundies. Watching this. Yeah, look at the 2-year. Crazy. This is radical, huh? Compared to Monday? What day is it today? Wednesday? This is way different. There is something huge happening in the Treasury market. Huge. Huh? Huge. Remember, this impacts your money. And it seems that there might be a change in opinion on if or when the Fed raises interest rates. Yeah. So yield is dropping here and rising there. I'm telling you, over the summer, you definitely definitely need to watch this yield curve. And I'll tell you right now, this is too high and this is too high. I mean, we track this every day. I tell you every day. So I know you know. But this is the market saying, hey, the Fed might raise interest rates. Now, this was all red across the yield curve. No, not now. So something's changing here. They're locking in the high yield. They're locking in 4%. So, and these guys are not locking in 5. Locking in 4, not locking in 5. So, let me thread the needle for you. Let me tell you exactly how to trade. Versus just trading euro dollar every day, that's amateur hour. You're going to fail. It's embarrassing. You're embarrassing yourself and you're embarrassing your mother. You're not going to make it. Now, a sophisticated trader will say they have the data, first of all. You can't be sophisticated if you don't have data. Otherwise, you're just guessing. That's not sophistication. So you have the data and you're like, hey, I believe based on my research, the U.S. stock market is going to go up in the end of September. Maybe your analysis is the end of August. Whatever. It doesn't matter. You do your research, you come up with a strategy and plan. And then you're using data to confirm or deny. So I want the stock market to go up. I have a retirement account, a pension fund. I would benefit if the stock market went up. I manage charitable endowments. We invest in the stock market. They would like to see the stock market go up. I don't know very many people that say, you know what would be really good for me right now? The stock market to crash. All right, cool. Now they worry about it, and if they don't have data, then once again they're guessing and they're terrifying themselves. Okay, so what's the point of this? This tells me the stock market not necessarily up now. Nor do I actually expect it to have a massive rally now. It might, but probably not. And if it did now, it would be relative to geopolitics and or the seasonality of the midpoint of a 4-year political cycle in the United States, which I'm going to research for you because many people have asked for it. So either way, we're thinking up, but we don't know. Is it at the end of the summer or the end of the third quarter? There's a 4-week difference of window. But you know what you intend to do. You're just, when do you attack? When do you attack? And this would be a key element of suddenly these are turning green and these are dropping. Game on, attack. Okay? You're waiting for the sign. You're waiting for the smoke signal. What are institutional investors doing? Now, go, everybody, go. Okay? Go. You have the data. You know, another one, legal and ethical inside information is, once again, let's say you wanted to trade the S&P 500. Why not? Okay. The market's short. Is it a good time to go long? Well, they're more short. They're not very, very, very short, but they're short. Okay. There's a lot of profit taking going on. We can see it. It's done. Okay. Cool. There's more bears than bulls. Makes total sense to me right now, by the way. Okay. And we want this to turn green. Okay. Let's pretend we've done our analysis Okay, remember, I'm giving you the secret sauce here. Yes, your moving average crossover strategy is brilliant, but you need to know when to deploy it and when not to. This is the secret to success. We can do technical analysis all day long, but if you do it on the wrong asset at the wrong time, you're going to get mixed results. And that's probably what you're suffering. So I'm fixing you. I feel a Coldplay song coming on. How does it go, right? Lights will guide you home. Hey, and ignite your soul. And I will try to fix you. All right. So you're brilliant at technical analysis. So now you're like, when do I attack? So you got your technical strategy and tactics. Like you can kick down doors like nobody's business. Right? You have the high ground. Great. You got snipers. Great. You got 50 cows over there. Great. All right. Good old machine gun nest over there. Cool. You got your soldiers all set up in crossfire positions. Cool. But when do you attack? This tells us not now. You want to start heavily buying the S&P 500 when institutional investors are heavily buying it. We have the quantitative data pulled from the Commodity Futures Trading Commission. We suck this directly out of the government database. Think about that. And it is a fact that last week they were not buyers of the S&P 500. Now they bought a ton of Dow. This is evidence of the rebalancing part of seasonality. Nobody wants to dump NASI because they're too long on the Mag 7. But they're like, you know what? I think we'll rotate out of S&P and we'll rotate out of some of the NASDAQ. And where are we going to put it? Into the Dow. Why? Well, you can hide in the Dow over the summer because these are global monopolies. Pretty safe place to hide. They're not crazy growth companies that are valuated by or have valuations based on hockey stick charts of how many trillions they're going to grow in the next 5 years. No, these guys are steady Freddy. They're in every market. They're in every country. I don't know. Is Coca-Cola still a Dow company? Just imagine you're like, really? They're not necessarily Nvidia stocks. They're Coca-Cola. That kind of stuff, right? And you're going to hide there. And then in the summer, okay, at the end of the third quarter, you're going to rotate back into the S&P 500, and we will see that signal. And then you start trading with the institutional investors. So I don't want to see, red here, green here. That's not a trend. But if this over a week or two goes green and every week this is green, that is a trend. And now you go to your charts. In particular, if it lines up with seasonality. Okay? Okay. What do you think about July? NASDAQ should go up 4%. Oh! See, you should not be just discovering stuff like this. This has been sitting here for weeks. And so maybe that explains why NASDAQ hasn't fallen dramatically so far. Okay? But what about next month? Why don't you ask him? We go from up in July to flat in August, which is a Debbie Downer. That's a Debbie Downer market. So there's a peak in July and then a fizzle out fade. So even though July is up, between July and the end of August, there's a 4% drop. So up 4% July, down 4% in August. Whoa, whoa, whoa. Are you ready for that? See, that's an opportunity or a threat for you. So in the next 2 weeks, as we get closer to the end of July, we are going to move towards this kind of regime, most likely. So you already know this is boring information, I'm sure. But we covered this last month, and we covered it starting Canada Day, which is July 1st. But you know, 75% of the last 5 years, NASDAQ went up and went up on average over 4%. Over 5 years, 3%. And some years, dramatically more. The worst year was less than -1. So the worst year out of the last 5 years, we'll just call it -1%. The best year, we'll just call it +10. Averaging it out, we're looking at 4. So why don't we just call it 5? It can go up 10%, average 5, and it's only ever lost 1% in the last 5 years. Well, you know this, right? Yeah, but it's done. We already did it. So here is the secret sauce. Are you paying attention? The secret sauce is we may already be done July. I don't look at July as a calendar month. I look at it as peaks and valleys. So you're like, we still have 2 weeks in July. No, July's done. What are you talking about? This is about August now. And that's the difference between you setting up your trades like an amateur. You're like, tell me about the MACD. Hey, is this a 3-wave or an ABC correction? You're like, dude, really? You're not going to ABC 1, 2, 3 me, are you? Save that for the Jackson 5. Let's start with, hey, did we already peak in July? And if so, what is the probability that this slides all the way to the end of August? Down. Well, it's actually pretty good. 40% of the time. Okay? Is not good. And in fact, you should, in your outlook, say, you know what, we're up 4% right now, but that could fizzle all the way back during August. And then, because you're so brilliant, you're so knowledgeable because you have 20 years of weekly data, you're like, September is nasty. So we're up now and you feel long and strong. But what if you gave up all of July, all your wins in July? Let's say you're doing really good right now and you're very happy. What if you knew there was a 40% chance you would give up all your profits? And then a very, very, very strong possibility as we roll into September, you actually lose a boatload of money. Let me ask you this. Does this seem like important data to you? Should you be preparing? How important is this kind of knowledge to you? Are you going to adjust? Are you going to prepare? Are you going to use it, or are you just going to trade euro dollar all day? This is amazing data that most people don't have. They're going to get blindsided by you because you're ahead of the curve. And so, well, there's blood in the street because they're like, oh my God, July started so good. It was awesome. We had Canada Day, and then we made some money, and then we gave it all back, and now we're losing. It's so horrible. Well, you already went to cash. This is what you do when you're a fund manager. 2 days ago, I think it was 2 days ago, yesterday? No, the day before. The day before yesterday, I moved to cash. Not 100%. I underweighted our exposure to risk and took on high yield cash as a short-term hideout for the endowment. And I told them, be ready to deploy the capital the third week of September. Now, how could I do that? Well, look at this. So I'm already like, well, this, and then this, and then this seems like down to me. And then what? Well, September's negative. This is why I want to buy. You're like, wait, that doesn't make sense. Why would you buy something falling? Because I buy low. Now, I wait for it to fall. This is why we do our standard deviation calculations here. So if in the early part of July, NASDAQ falls 1%, I'm like, buy. But if in the middle to the late part of July, we're up 8 or 9%, I'm like, yeah, we're going to top out pretty soon. And then we're going to drift. And then we're going to get back to break even by the end of August. And then we're going to fall. Well, I need this type of data here to understand where the peak would likely be, not based on time, but on standard deviation. What is overbought traditionally? And then when you get to September, and I'm waiting to deploy capital by buying the S&P 500, buying NASDAQ, get out of cash because cash is trash, and turn that into an asset allocation. So now I have a general idea. Well, I know it's going to be September, and I know it's not likely to be a significant drop right at the beginning of September, but I also am sure by the time we get to the very end of September into October, people have already entered. So I know probably the second half. I'm going to guess the third week because you know the second week is a Fed meeting. And then I could look at the standard deviation and say, well, if the average is -4, okay, and NASDAQ is fallen 8, I'm going to go to my charts now and say, oh yeah, this is oversold right on time. People are freaking out. They're dumping trades and taking losses. Awesome, because they suck. And we're awesome. Good. Where were you in July when you were supposed to be hedging? Where were you in July when you were supposed to be rebalancing and rotating? I thought the Mag 7 would go up again. Dude, you suck as an investor. Cool. So they are going to pay the penalty. They're going to take a bloodbath in September, and that's good for the smart money. So when there's blood in the street, and I see we expect as much as a 4% drop, and it actually drops 8 because I'm looking at the standard deviation of the last 5-year blood blasts, and this one is even more. Cool, then I see it's oversold, it's relatively cheap. Then I go to the charts, I see we're at a monthly reversal pivot point or pivot profit zone for bears or psych level, or I'm just waiting for 1, 2, 3 roll reversal type patterns. I don't know, but now my technical analysis is kick butt accurate because I'm ambushing, I'm waiting and then ambushing, and then I can confirm on the charts, is it an opportunity to take the risk? I can confirm on the COT, is smart money following me? right? I can see it in my seasonality. Is it normal? I can see it in the yield curve. What are other institutions doing? And of course, if I'm looking at the chart and I see a double bottom higher high, dude, I know it's game on for the buyers, and I'm just going to buy a higher low, kick it off of a pivot point, kick it off a moving average, I'll pull the trigger on a Stokes. None of it matters. That's so straightforward, boring, especially if you got like an amazing plan like this. That's just simple confirmation. Knowing what to trade and when to trade it, that's the big decision. Trading a double bottom, higher high, higher low, that can't be that difficult. Come on. Buy higher low. You can even be sloppy. Right? You can be sloppy. Let's define sloppy. You open up a Fibonacci pattern and you place a limit order, a tiny one at the 382, another tiny one at the 618, and both stop losses are a lower low, which isn't likely to happen in an uptrend. So you buy a little bit on a 382, you buy a little bit on a 618, and both get stopped out below the 786 or below the 100. And now what? You're probably going to win. And you're like, but I don't have to wait for the 5.8. I don't have to wait for the Stokes. I don't have to wait for the MACD. I don't have to wait for the CCI. I don't have to count the waves. No, dude, just buy a freaking dip. It's an uptrend. Buy a pullback. Put your stop below the lowest low, because an uptrend says, well, it probably won't make a lower low, right? So it's like, don't make it complicated on the charts, because the charts don't tell you anything. That's the big lie. I'm a technical analyst. I love charts. But if you don't know what to do and when to do and why you're doing it, then what the heck? You see? But once you know what and when and why, going to your charts to look for a higher low is not child's play. But if you looked at 100 different charts and you're looking for all those things and the rationale behind them, let's say the chart strategy is the same on all 100 charts. You're going to buy a higher low, or you're going to sell a lower high. Okay, same strategy, 100 different charts. And you're going to deploy them, and some of them are going to work, some of them are not. Some are going to make money, some are going to lose, some are just going to break even. And you're like, dude, I'm all over the place, and at the end of the year of doing thousands of these, I'm not making any money. Because you're blind, not because your technical analysis isn't good. If you had asset selection and 20 years of data to know what assets and when to be focused on them and when the probabilities are not in your favor, then your technical analysis success goes through the roof. You're like, this is the right time to buy Ethereum. Based on the entire history of Ethereum, this is a great time to be focused on Ethereum. And now I'm going to use my moving averages, my Fibonacci, my pivot points, my 1, 2, 3 ABC Elliott wave strategy. Dude, do whatever you want to do. They all do the same thing. They buy dips in an uptrend. Every strategy you've ever come across buys dips in an uptrend, unless it's stupid. There are stupid strategies and whatever, if you think, yeah, but whatever. Let's just focus on what we know works. What is the universal truth? What is the universal truth? What do you know for sure? You identify an uptrend. You buy higher lows. All the tools, you have 1,000 indicators on your charts, all to do one thing: help you identify the dip. Now, in a downtrend, you sell rips. You sell lower highs. You have 1,000 tools on your charts to tell you, okay, it's pulled back and now it's rolling over. Good, done. I don't care which tool. That is not that important. I could do it on almost a naked chart. Now, actually, I can do it on a naked chart. Entering the trade is the easiest part of trading. Knowing when to exit, now that is a gut buster, brain buster. That is hard. Entering a trade, oh my God, that's the easiest, right? Sell a lower high. Well, it pulled back and then it rolled over. Yeah, sell it. Okay. So now if I can help you with quantitative data and macroeconomics and market sentiment to put everything into context, I can improve your asset selection. And now you do your thing on the charts. You can do it my way. My way I've back tested. Well, I back tested by trading it for 25 years, but I just back tested it with Ada, and he's like, holy smokes, what you do is great. And I'm like, I know. That's why I wrote a book. But don't take my word for it. You don't have to do what I do. You can borrow some. You can do something different. There's plenty of people that said, Wayne, I like what you do, but I try with swing trading and I find it inconsistent, so I like to scalp. Now, I don't think that's the right decision, but it doesn't matter what I think. You do you. Maybe you're swing trading all the wrong assets. That's what I think is probably more likely. Sebastian, they're offline. Yeah, yeah. Was that right? Love the book. Appreciate it. I've never read it. I only remember parts of writing it, but I remember like I I remember writing things like when I first started trading Forex, I sucked. But with a ridiculous, sickening work ethic, I studied and studied and studied and trained and trained and trained and traded and tested. And after a while, I started to suck less and less. And I remember Wiley Publishing's like, dude, you can't talk like this in a book. And I'm like, screw you then. It's my book. I'm going to write my book. You're not going to tell me how to write a book. Why don't you just print the pages? You print the pages, I'll write the book. So they're like, it's just too raw, honest. And I'm like, yeah. I just got on a Harvard board and I just met with the chair and the vice chair like 2 weeks ago. And I said, you're not going to like me. I'm going to scare the heck out of you and everybody else on this board. I'm not here to make friends. I'm not here to feel important. I'm here because I'm going to achieve the mission and I'm going to make this board, blah, 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 right? And I said, so here's the thing. The reason you're not going to like me and the reason some people will actually hate me is I will tell the truth and I'll give you raw, direct honesty. Because if we only meet once a month, I don't have time to waste. I might only have a 5-minute speaking window because there's so many people on the board and they want to go blah, blah, blah. Let's talk about our party. And I'm like, screw you. Let's talk about the mission. And I'll cut to the chase and be raw, honest. And people are going to hate it. It's going to terrify them. But I will promise you the truth. I love it. I love it. It scares the shit out of people. But from my point of view, it's funny as hell. Yeah. Dude, I'm telling you, if you can't have fun with your life, oh my God, come on. Like they say in Buddha, like the Buddhists say, you only have 8 lives. Don't waste them. Yeah. So anyway, I wrote one book and it's brutally honest. There you go. That's what I would do if I were me. Let's see if he's updated this. I don't think so. I'm going to have to yell at him. Oh, he's getting a little better. All right. Dude, this is cool, right? You see what we're doing? We're adding PMI to Aiden's brain into the neural network, and we're slowly gathering PMIs. Nice. So, what if this turned into a map of economic activity? What? Yeah. So I'm playing with different ideas. I got more ideas coming. Yeah. But we can compare services, manufacturing. I prefer the composite because you're like, I know we say, oh, Germany is a manufacturing country. And I'm like, yeah, that is true, but you don't think they have any offices anywhere? You don't think Germans walk around wearing ties? You think it's all blue collar? Everyone goes to work with a lunchbox and a toolbox? Really? They're all manufacturing? Nobody has a tie in Germany? Really? Yeah. So anyways, like, let's put them together. Yeah. We got the stock market opening soon. Yeah. Nikkei's still down because of the elevated oil prices. Are you selling Nikkei? We've been looking at it every day, right? Every day. Nikkei's down. Why? Oil prices are up. So if oil prices are up, are you selling Nikkei? What do you do with this information? Hey, WTI is up again today. You're like, yeah, that's interesting. But are you buying energy? Are you selling Nikkei? You're well aware, I'm sure, of the relationship. Look at our score on Nikkei. Aiden is telling you it's a -5. -5. It's been -5 for a long time, hasn't it? -5. So are you selling it? Okay. My gosh, right? Oil +3. Nikkei -5. Is there a relationship? Yep. So I'm going to work to make this next level. And one of the things you should be able to easily do is say, well, what is the relationship with energy prices and Nikkei? Could it be so simple that if oil prices are falling, typically Nikkei rises? Or vice versa? If oil prices are rising, Nikkei falls? Now, don't wag the dog where you're like, well, it's all about Japan. If the Japanese are buying, it moves oil prices. Whoa, 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 whoa. Don't wag the dog. Correlation, right? Causation. Okay. Understand what's going on here. If you're going to buy oil with yen, you're shorting the yen. Or in this case with the Nikkei, if Japanese companies have to pay high energy prices, they're going to be less profitable. What happens to the valuation of less profitable companies? Margins are falling because expenses are rising. Oh, well, they're worth less. Yeah, that's what the Nikkei is, the value of Japanese companies. They fall because they're less profitable than they were a year ago. Well, that makes sense, right? So that's the thing. This is all about making sense. And dollars, buddy. Cents and dollars. If it don't make no sense, it don't make no dollars. Your trades have to make sense, or you ain't gonna make dollars. This is my Trader's Way, beautiful platform. This is the long-term dollar trend. Okay, but we want to look at some of the stuff that we've been doing. Okay. This is from yesterday's conversation at 4 o'clock, because we meet at 4 o'clock, and we have a down, down, up plan. Okay, we planned it all out. I believe we used Fibonacci. Let me do it again. Boop. Boop. So I said, I don't know, somewhere in the middle. But what we really, 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 really know is the plan for a bull is to buy a higher low. So somewhere between the 382 and 618 is a higher low. Which one? I don't know, bro. Figure it out. Pick the one in the middle. So let's say if you put the one in the middle the way I drew it, and your stop is below here, you're in this trade. Now, you might be early, so you can wait for the next level, which would be higher high, higher low then. Okay. Yeah, I agree. That would be less risky. That could be a good idea. But if you used what I did here in yesterday's, because remember, yesterday was a projection. It's like, well, somewhere in here, because at the time we were way at the top. There wasn't even a pullback yet. So we're like, yeah, look, it's been up all day. It's going to fall. And either London or New York are going to take it up if Solana stays bullish. Now, we have historic data to say it usually is bullish. And I think if you go a little further back, okay, what we're doing is we double bottomed, up, down, and guess what? You don't see it here, but when we go to an hourly chart, this is next week's trade. We're in a trade on Wednesday that should last a week to 10 days, maybe, if it works out. Dude, shut the back door. Yeah. But if it goes lower than that, we're out. So entry, right? So your entry, okay, what, as you can see here, your stop would be below this. So you're risking this much, and you're going for this. You're like, wait, that's like a 19-to-1 risk-reward ratio. Yeah, why? What are you doing? What's your risk-reward ratio? Okay, so we did this yesterday. Boring. It hasn't worked out. Yeah, that's true. But at least we have a plan. See, next week's trade might even be next month's trade. Yeah. But off we go, HOTTOGO. Okay. If it works out, then. But we don't know. We don't know if that's going to work out. There we go. Okay. So what about this one? Okay. We want to buy Ethereum. So we bought this pullback because this was a double bottom. Up, 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 down, down, buy. So that was a swing trade. Stop has already moved up break even, can't lose money. Great. So yesterday we were talking about day trades, and you're like, well, Wayne, it's already come through. Well, actually, I discussed that yesterday. How this actually seems toppish. And I showed it, and I said, this is why you do multiple time frame analysis, right? So I'm like, there is a higher probability, but let's say you want to, you're still, you understand the vulnerability, but you're still going to trade until it fails. Okay. So anyway, so I showed yesterday, you could put one here and one here, and which we did. Okay. Now, it's made a lower low. If I had put stops here, I'd already be out. I forgot to put the stops. I was just showing an example of plan A, plan B. Okay. And of course, the general day trade strategy was here. But if I recall correctly, we'd hit a definite take profit zone. We also know that this fails by the end of July. So whatever. Don't be shocked that this is happening. But the other major point is this. You see that green zone? That puts additional long trades off the table. Takes them off the table. You are now neutral. If this makes a lower high and starts to roll over, yeah, you should probably take those losses. Get rid of them. Yeah. Okay. We were focusing on loading and reloading. So like this entry here, up, down, buy. Okay. This green zone is a buy. This one is not. Where's my drawing tool? Why am I doing it this way? Epic. Let me get my EpiPen. There it is. All right. All right. So when we look at this, this puts us in pause. Okay. When we look at this, this puts us in pause. Do you know why? They're lower than the previous buy zone. So imagine when we're up here at the top. Imagine when we're up here at the top. Imagine when we're up here at the top. What is the plan? Okay. Well, we went from here, from the original entry. The plan is down to this green zone and up. That's the plan. We don't even know if it's going to pull back. Sometimes it doesn't even pull back like this one. But that's the plan. Every single time. Higher high. Okay, higher high. So your plan is to buy a higher low. The key tool that I use to do that, the key tool, there are many. What I like to use is pivot points because it's a weighted average. It has implied weighted average implied volatility. I know Fibonacci sounds better. It's just implied volatility. Weighted, which means it's directional. So a higher high versus where we were. Okay. All right. So pivot points for me. Again, weighted implied volatility, which means when we were up here before the pullback, our assumption was somewhere in this zone, doesn't even matter to me, is up. That's all I know. Same thing here. When we were way up here, all I know is somewhere here is a buy zone. Do I know if it's going to pull back enough? No, I don't. It hasn't happened yet. I don't know. But that's my higher low, baby. Then we make a higher high up there. So what's the plan? This seems to be my buy zone. This is what I'm planning. Okay, the fact that we dipped more, okay, is a huge red flag. And the fact that this new buy zone is lower than the next one, I can't add more positions. I am now neutral. By definition, the uptrend may be over. And if it does this, oh my God, it is over. So I'll take my profit from this trade. And unfortunately, I was too aggressive up here. I was using an example. We knew it was too aggressive at the time. Okay. But anyways, so somebody said yesterday, they're like, Wayne, I love traders, but it always tells me late. I'm always late to my trade, I think it was stated. Yeah, because you're thinking about buying here. That's the wrong mentality. And you're like, but Wayne, it told me it's been bullish for 2 days. Yeah, it has been. But then I get there and it's already at the take profit zone. Yeah, I know. That's why it's going to pull back. You want it to do that. Now you have to say, well, this is my plan for the next day. Look how perfect it was. Cool. So now you're up here. Buying up here usually is not a good idea. So I would expect this to be the next play. But it didn't pull back. Well, it doesn't always work perfectly. It's implied volatility, weighted. So it is directional. But just because it happened yesterday doesn't mean it's going to happen today. It's just probably something like that. So this is why I use moving averages. I have two areas to eyeball for reentry. Okay. Am I going too basic here? You're like, dude, Wayne, we know this. This is kindergarten stuff. By the way, look at my double bottom long. Yeah, it's gorgeous, right? How do you feel now that we're looking at the 4-hour 21? See? Okay, I changed the time frame. The technique doesn't change. We just go from a day trade to a swing trade. That's all. And we know, because I've taught this for 20 years, week after week after week after week after week. 20 years. Is that literally 1,000 times? I've literally taught this 1,000 times. Okay. 2155 is the buy zone in an uptrend. So if I'm swing trading, this is perfect. It doesn't look perfect on a day trade, but it looks perfect on a swing trade. See, again, up, 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 up. This is where I say I'm going to buy somewhere around here. So was it the pivot point or was it the moving average? Yes. They're the same thing. Okay, one is a smoothed out average. The other one is a weighted implied volatility. Think of it as standard deviation. So both of them are just buying low in an uptrend. Don't get lost in the mechanics. This is the easiest part of trading. Now, you might get upset with that. Well, don't get upset with that. Think about it. I want you to believe it. I don't want you to you don't make your money on technical analysis. If you didn't even know to trade this, then it wouldn't have worked out. You would have lost money doing this on the wrong thing at the wrong time. The charts are not going to save you. They just tell you entry and exit points. They're just rules of engagement. Kicking down the door isn't winning a war. Knowing where the bad guys are is very helpful. Yeah. So, again, I want you to find things that are trending and then wait a day or two or a week or a couple of weeks for your entry. Higher high, great. Higher high. I love higher highs. I love higher highs. Why? Because I want red candles. I want the red candles. I buy red candles. I buy the future. I trade the future, not the past. So when I see a higher high, I didn't miss a trade. What the heck are you talking about missing a trade? Because I'm looking for the higher low. Okay, I'm looking for the higher low. So this one I didn't get an entry. Too bad, so sad. I'm looking for a higher low. Okay, the higher high sets me up for the higher low. I'm a buyer of higher lows in an uptrend. This is what I do. This is what you do. But like I said, that's the easy part. Knowing which asset and how long. This is why I like pivot points, because it gives me targets, not just entries. Entries are, dude, buy a high and low. Do it nay-nay. Do it nay-nay. Okay? I'm just trying to, like, how can we, Lucas, zero lag. Yeah. Cool. Look, do it that way. When it pulls back into the ribbons, buy it. If it's below the ribbons, probably the trend has ended. Just do that. Okay? You can do that. That's easy. If it's right at this point, you see the crossover, it's bullish. So when it pulls into, buy it. When it pulls back into it, buy it. When it pulls back into it, buy it. Just that. That's it. Maybe you prefer price action only. Cool. You mean like that? No moving averages at all. Just somewhere near that continuation. It's even labeled in English. I'll move it all the way back so you can see it. This is why you look at higher time frames as well. One of the things that was important to me is the double bottom. Another thing that was important to me is this. So I have 20 years. Well, Ethereum hasn't been around that long. But I have the entire history of Ethereum. I want you to think about that. This is what's important. Trading higher lows is easy. I want you to tell yourself this. I want you to believe it. I want you to actually do it. Buying higher lows is easy if you're trading the right asset. The mediocrity of results comes from the mediocrity of asset selection. Your randomness inside of a random market just doesn't make sense. Okay. On the 1st of July, our belief system is that Ethereum goes up 22%. That's our belief system. Our analytics proves it. Now, is it going to go up, down, or sideways? Well, every year is different. Doesn't mean this is a gift from God. It's not your permission to print money. It's just what's happened in the past. You're like, oh, well, that's an interesting statistic. Okay? And then we calculate the standard deviation of that. Sometimes it's 40, sometimes it's 2. Okay? But our expected outcome for Ethereum in the month of July, starting on that circle, is up 22%. Now, when you're already thinking this, when you're in June, which is here, and you're like, I think it's going to go up in July, how do you perceive the double bottom? Remember, confirmation bias is a good thing, which means you've already done the analysis. You're like, oh my God, there's a high probability this is going to go from a dog with fleas to a hero. Oh my God, there's a high probability this will start going up soon. And then you see a double bottom. You're confirming subconsciously that you saw exactly what you expected to see. Confirmation bias. But that's not an entry. That's just saying, oh my God, that's perfect, like right on time, oh my God. Okay, 3 days before Canada Day. You're like, oh my God, that's just amazing. That's exactly when the data suggests it's going to double bottom. You're like, I can't believe this. This is unbelievable. But I still can't trade it. I don't buy double bottoms. I only buy higher lows. Now, if you guys are listening to me and if you're serious about improving, type that in the chat. I only buy higher lows. Come on, work with me. I'm your coach. I'm your trainer. Okay? I'm trying to get you to be awesome. Okay? There's no mediocrity is not allowed. Those days are over. Okay? All right. So then how would you feel about the higher high, higher low here? On Canada frickin' Day. Sorry, I'm cursing, kind of cursing. To put a huge exclamation point. We talked about that 6 months in advance. And on the day of Canada Day, Ethereum makes a double bottom, higher high, higher low, confirming the double bottom. The cursing is the exclamation point. It's the sledgehammer, the velvet sledgehammer across your forehead. You better notice. You better notice. This should be like, oh my God, I've been waiting for 6 months for this. You're kidding me. That's amazing. And if this works out, I expect 22%. That would be the average return over the recent period. Wayne, just an observation, wouldn't the top of the range... Oh, yeah. Yeah. You're saying this is dangerous, right? Yeah, for sure. This is why you have seasonality. Well, you're not confused. Take profit there if you're worried about it. That's okay. On how? Okay. But what was the stats? Does anyone remember what because I don't want to leave this page, but I thought it was something like 75% of the time Ethereum makes money in July. And on average, it's 22%, which is triple what Bitcoin does. Well, that's supposed to bring you that level of confidence. Also on how, look, it did respond. People did take profit. Okay, so what did I do? Pull back on a much smaller time frame. Higher high, higher low, gone. And there should be another one here. And there should be another one here. And there should be another one here and here. And then at some point it'll fizzle. And that's where seasonality is likely to happen. How about geopolitics? Whatever, bro. It's like one of those things like, look, the markets are not reacting to the geopolitics. The media is reacting. They're selling it hard. But it's almost like if all you had was economic data that actually just measures the facts, there's a high probability you wouldn't even know there was a war going on. Oh, the Trump just dropped a 30,000-pound bunker buster. Wow. Yeah, that's a big bomb. I don't see it in the markets. So that's not what trading the news is. You have to understand. Trading the news is very misunderstood. We use news flow and use our neural network, which is crazy, right? Just I love saying it because it's so crazy. But we use our neural network to place our economic data into context. Yeah. But let me repeat. We went to war in early in the year, and and oil prices didn't change. We were in month 3 of the war. Stock market hadn't crashed, but oil did finally go to 100. But it usually does. It waited like 8 weeks before it seriously went up. But it seriously went up exactly like this. Like we expect, right? We expected 6 months in advance that on this day Ethereum would start to go up. Well, that's a heck of a guess. Imagine exactly the same thing happened with oil. And I talked about it before the fact, not after. And we looked at all the data. We looked at all the seasonality. We looked at OPEC. We looked at the Energy Information Agency. We looked at the IEA, the International Energy Association. We looked at the World Bank. We looked at the IMF. We had years of history. Like, son of a gun, we were the smartest people in the room, and we're like, yeah, oil usually goes up. It didn't go up until it was supposed to go up, irregardless of us in an active hot war, a kinetic hot war. And oil went up when it was supposed to go up. And oddly enough, it peaked out and came down when it's supposed to, and then went all the way back to 60 when it usually does. Yeah, okay, now boom, we're back to, 80 something. Okay, yeah, that is geopolitics for sure. But the vast majority of what we see in the data is normal. And if you're trading your billion-dollar fund based on the fear aspect of geopolitics, you're not doing it right. You're listening to TV too much. You're reading blogs too much. You watch too much YouTube. You should have the data. Just be the person that people turn to. Don't turn to YouTube gurus. You're way better than that. Okay, so going back to this. Angel's right. Angel, if you took profit here, yeah, that's totally the correct thing. Okay? Totally. That would be a good decision. And now the next thing is, this might be the next good decision. Now I might lose there. See, this is the hard part about trading. It's the right thing to do. It doesn't mean I'm going to make money. So I got to have even more data. I'm like, okay, now that we've had this big run in Ethereum, where does it end? Now that's the question you need to be good at. Entering something that almost always goes up 22%. Dude, that's not supposed to be hard. I want you to really believe that. So you do it. You have confidence. You're like, dude, the easiest part is to sit here and go, Ethereum almost always goes up. And then you go to your charts, and I don't care what chart you use, you recognize that it's probably happening, so you start to do it. Okay? So it's not your technical analysis is all I'm trying to say. We could try weekly pivot points. Okay. This chart tells me we're going to go long and get to 1964 by the end of the week. So I don't like the fact that these are not making money, but I'm not that concerned. Okay. That's just one chart. Okay, whatever. What if instead we look at swing trading bullish bias? Okay, cool. So what's the next move, son? Somewhere around here, we want to get long. So if I had done this yesterday, I'd just be in the first trade. I would not be in the second trade. Now, let's say you don't use pivot points. You don't use pivot points. On the 4-hour chart, you buy at the 21 EMA. Done. That would be my plan A. My plan B would be this role reversal area, and that might be too aggressive. I might put it down here in reality. Okay. Which is what? Front running the 55. So now if I use no pivot points at all, I just use moving averages. In fact, let me get rid of the 200. You're like, what's the 200? Okay, the fair market value. Don't worry about it. Okay. And what about the 5A cross? That's, yeah, look, I'd probably do a 5A cross on a smaller time frame. But if you're like, well, what is it all about? Dude, look on YouTube. I have 5,000 hours of me explaining that 5A cross. When it turns up, go. But you could just buy it at or near the 21, front run the 21. Plan B would be front run the 55. So you got two plans somewhere around here. Cool. So what does that look like? There's my plan for Ethereum. This has no seasonality attached to how long it's going to rise. The seasonality was to look for the entry. This isn't using implied volatility. It's not using, it has no target. It's not even really using any real price action. It's just two moving averages. And a guru will tell you, because they're stupid. Am I a little too harsh against other coaches? Yeah. I'm sorry. It's just, okay. They'll tell you, buy here. Dumb! Dude, that's so dumb. Wait, because they tell you, look at the moving average crossover if you only bought there. No, look. That means, okay, now I happen to be in the price, but I didn't buy there. See, the crossover, by the time it crosses over, price is already here. What did I do? Higher, high, higher, low. I bought here. Dude, you don't buy moving average crossovers that way. It looks good to an amateur. It makes no mathematical sense. Because it's not like you bought here. No, you bought like here. So what happened? It went up, it fizzled, you broke even, okay? Or you lost a little bit of money, and I took your trade, and I'm making the money that was supposed to be yours. But I had a better plan. I earned it. You didn't. This because you listen to YouTube gurus with no education, no experience, never been regulated. You listen to this person? No, I'm not talking to you. I'm putting it in the recording to make an impact on the YouTubers. It just doesn't even make sense. Okay. So the plan is this, isn't it? Yeah, cool. So off we go. Everything looks fine. I should be making money on this tomorrow, or I'll be out of the trades. We can change the chart again because I can tell you that I've shown you just pure price action. I've showed you pivot points. I've shown you just using 2 moving averages. I'm telling you, this does not need to be complicated for you to be a success. And the fact, the more complicated your strategy, the dumber it is. I learned this as a VC. If people come to me, and they always did, they're like, we have made a nuclear-powered rat trap. It kills rats 100% of the time without fail. Now, it's nuclear powered. It costs $27 billion, and but it'll never fail. Your rat problem will go away. I'm like, I don't have a $27 billion rat problem. I'm not going to invest in this. Hey, I'll give you another example. I had a, what was it? A Mercedes AMG 55 CLK Cabriolet. 5.5 liter V8 Mercedes in AMG engine on a 2-door car. And not a stupid CLK that had, an AMG steering wheel and AMG wheels, and they called it an AMG. No, 100% AMG, made in a different factory than the regular. Okay? I'm telling you, impressive car. Now, this roof was the kind where the back of the car, like the trunk, would open backwards, and the roof would fold up, and then the trunk would close again. Oh, awesome. It had to have been made out of 10,000 parts. And because the car was only $150,000, they decided to make all the parts out of plastic. And the cheapest plastic they could find. I think they went shopping. They're like, hey, do you have anything cheaper? We want the cheapest plastic for these things. So, way cool, way overly complicated. So I take my dad golfing. That's why I bought the car, because I could put 2 sets of golf clubs in the trunk. Can you imagine? I think actually one in the trunk, one in the back seat, because it had a back seat for, I don't know, rodent, for a guinea pig. Humans couldn't be back there unless they were 50 pounds or less, right? So it had a tiny sort of GT type back seat, and I could put a set of golf clubs back there if it took the driver out. So anyway, so my dad and I can go golfing in my super hyper car. The country club was 1 mile from my house. So we drive the 1 mile. Yeah, and you get there, and so after golfing, my dad and I come back, and we pull the golf cart up to the car, and we're taking off our shoes and everything, and we've been out in the sun all day, and he takes his straw hat off. The straw, because it's hot and humid in Georgia, so you want it to breathe, but you want to be out of the sun. So he's got a straw hat, and he puts it on the roof, and then he sits down on the seat, and he's taking off his golf shoes and put it on his street shoes, and I'm like, hey, I'm gonna put down the roof, and he's like, yeah, sure. I didn't see his straw hat, super flexible straw hat, on the roof. Broke the roof. Broke the roof. $2,000. A straw hat. 1,000 pieces to make this stupid thing work. As a VC, I got crushed on those types of, well, no, I avoided those types of deals, right? A $27 billion rat trap that worked 100% of the time, like pass. Or how about this really cool thing, but it's got 27,000 moving parts. Oh, wow. Pass. I like simple. Simplicity is genius. Anyone can make something complicated. Genius is simplicity. So if you can't trade with these two moving averages, you can't trade. So don't put like 19 other things. If you can't trade with that, you can't trade. And 90% of the time, it's you're doing the wrong thing at the wrong time for the wrong reason. You're just all over the place. It's a bloody mess. If you can't trade that, you can't trade. So that's simple. And I don't even need my price action pivot points on here. I didn't even see them there because that's one of my inventions. Price action pivot points. Okay, look, if you can't trade this, you can't trade. And really, you don't even need those two moving averages. But I'm just trying to make a point that I can stay confident in this trade. I have two trades, they're not making money. Oh, I'm going to make money. How do you know? Well, I don't know, but they represent a probability. I'm probably going to make money. I'm okay. Now, I also know when to hit the kill switch. But I am, in my opinion, missing data. Okay, I'm missing data. So let's go to here and let me add the data that I'm looking for. Cool. Precisely what I need. You tell me. I taught you how to trade, so you tell me what my target is. Okay, I've been teaching the same thing for over 20 years. I wrote a book. 25,000 people bought a book for $89. And in the book, it says, this predicts something. What does it predict? So now, see, I'm using a leading indicator, not a lagging indicator. I've gone to I've gone to conferences around the world. I've written presentations. There's in the training course, there's a whole presentation on leading and lagging indicators. No, John. No, answer the question, John. Based on this entry here, on the 1st of July, my true love gave to me. What does it tell me? I don't understand why I'm not getting everybody to answer. This is too easy for you, or is it too hard? You're like, Wayne, I'm too successful right now. The last thing I need is more money in my life. More money, more taxes, more problems. All right, well, then tell me that I'm covering stuff that's too easy, and I'll change the topic. You're the boss. I know this crap. You're like, Wayne, I know this crap. I don't need this crap. Well, then talk to me, Goose. Okay? This right here tells me right there is my target. Okay. Now, I might get lucky. It's not probable, but it could go there. It could, not probable. Okay. The lower one is more profitable. But if I kick off the 21, maybe I might get it. I might. If we're kicking off the 55, forget it. That ain't likely to happen. If at best we're going to go to $2,053.70, not 71 cents, not 2050, not 2000-ish. You either know what you're doing or you're vague as heck. And let me tell you, when you are watching things like Bloomberg and CNBC, the head of Wall Street banks that have trillions of dollars, he comes out and says 2000? You're like, 2000? What are you guessing? You're guessing? You can't say $2,053.70? Dude. Then I don't like institutions like that. Really? What is this, a Hail Mary? I'm not going to bet on a Super Bowl team or a potential Super Bowl team that wins games on Hail Marys. Yeah, I agree with you, Jim, but this is good for all of us, right? This is good for all of us. We're all masters of our art. Okay? I'm stripping down complexity. I'll tell you what humans often do. Not all humans, but some of us, because we all have our own modality. But subconsciously, we hurt emotionally from our losses. So we add the complexity to justify our losses. Oh, this is so complicated. That's the problem. No. I want you to recognize to yourself, the problem is you're not doing the job. Now, that's psychologically wounding, but you need to have that emotional breakthrough and say, oh my God, like this stops right now. I have everything right here, and I'm just not doing it. So before it was, technical analysis is hard. And then after that, the losses were like, well, I'm using the wrong trading strategy. And then the thing is, well, now I found Wayne and I'll use his pivot points. And then, oh, Wayne's stuff sucks. So now I'm going to go use some other YouTuber. Oh, their stuff sucks. So now I'm going to do an options trading course. And that sucks. So I'm going to learn how to flip houses for no money down. Or drop shipping, or like, Jiminy Cricket, just do one of them better than anybody else on the planet, and you'll be successful. So, like, dude, you got enough. 2 moving averages and the truth. Strip it down. Get rid of complexity. Strip it down. The problem isn't the chart. The problem isn't the strategy. And certainly now, the problem is that you lack the data. So now I want you to fight. You're like, I am strong. I am Groot. If you speak Afrikaans like I do. I am Groot. Yeah. I am big. So strip it down. Buy a dip. I want you to keep telling yourself, go for a walk and think. Don't put your headset on. Don't look at your phone. Dude, come on. Your phone's full of crap. Stop listening. Stop doing shit on your phone. Go for a walk and think about what we talked about today. Simplicity. And just do the frickin' job, because you know how to do this. You're like, I want you to think. No, when you think and walk, it's a labyrinth. You're doing a mantra meditation. This is so hugely important to your strength. Like, all I have to do is uncover the top 10 assets out of 100 based on logic and intelligence. And then look at the direction of the trend. Is it up or down? If I can do that, only focus on 10 assets, not 100. And out of the 10, really, we're talking about 5 or 6. But let's say 10. And you've already identified the direction. Okay. The last missing piece between you and your destiny is if it's an uptrend, buy a higher low, but not a lower low. Or if it's a downtrend, sell a lower high, not a higher high. Strip it down. Strip it down. Simple. Ridiculously simple. But you have ridiculous, sickening work ethic. I'm telling you. Let me reverse how I said it. It's so important. You should probably even write this down. You need ridiculous, sickening work ethic. And a ridiculously simple trade style. Trading, the entry is so easy. Buy a higher low. Strip it down and it's simple. Your focus is on asset selection. And if you can master this over the summer when trends are few and far between, dude, you are going to be a master level ninja with swords and claws and throwing stars and martial art combat against a bunch of kindergarten kids. And it's going to be a bloodbath. That's such a terrible analogy. It's not even going to be fair. You're going to be at peak performance and peak skill and peak confidence and peak capability to turn your potential energy into kinetic energy exactly when the markets get good. And this slower time, because you spent the time perfecting your art and perfecting your skill. When or if we get to the good times, you will have the confidence to trade like I teach. And now that is when the fish are jumping into the canoe, don't catch 3 fish and go home. Fill the canoe and get more canoes. And now it's survival game. You can't look, if you can't pick the right asset and you can't trade a 21.55, you got problems, right? And you don't like me talking to you this way, but you need to, your emotional and intellectual brain must express this truth. So emotionally, you hate failing and hate losing money. So you justify it intellectually with, well, most people lose money. Well, it's too hard. Oh, it's random. Oh, it's manipulated. Oh, my broker's hunting my stop. Oh, it's Donald Trump. Oh, it's the geopolitics. Oh, whatever. You're going to justify intellectually your bullshit problem. Turn that narrative around. You can absolutely do this. You have the skills, you have the patience, you have the discipline. You just have to do it. And with traders, you have the data to choose the assets better, to prepare strategies ahead of time, not after the fact. And because you have patience and discipline, and the actual trades are simple, you 100% can do this. And you will succeed, not because of you use the 2155 EMA. Dude, I can use a 2060, 2050. I'll crush it. I can get rid of these moving averages. I'll still crush it. Asset selection and a ridiculous, sickening work ethic will turn your sandcastle into a McMansion, if that's what you want to do. Brian says, are you using leverage on crypto? No, in the real world, well, like, okay, on an MT4 platform, yeah. But in the real world, like, most of what I do with crypto is actual real world stuff. No. But most of that's not trading. That's business, man. So I do a lot of buying and selling of crypto for sure. Yeah. Over $1 million? Yeah, for sure. Unleveraged? Yeah, for sure. But if you were going to trade crypto, boom, right here. This chart, for sure. But leverage, you don't need. You don't need that much. I'm going to answer that, and then I'm going to let you go because I think I've taken too much of your time. I had a slow start and choppy start, so I just want to make it up to you. But leverage, high leverage is for people with no money. Why do you trade money if you have no money? What you should do instead of using leverage is extend your time horizon. Instead of trying to get rich this year, even though you don't have any money, why don't you stretch it out 10 years and see if you can even survive 10 years? Do you even have patience or discipline? Or are you required to get rich quick? Well, you just failed. You just failed. Get rich quick? You don't even understand the concept of business and investment and money and okay? Or, and even better than this, get some money. Well, how do you get money? Work. Already have a job. Work more. So yesterday, I took it easy. I only worked 19 hours straight. The day before, 21 hours straight. So if you're like, I ain't got no money, but, I'm working over 8 hours a day. 8 hours a day? What are you talking about? You could probably have 3 jobs. Save your money and practice and learn how to trade and do that just do it for a year. Do it for 5 years. I went to Harvard for 5 years. You know how hard it is to be a full-time Harvard student and run a business and run like you're trading, right? And then raise children and be a half decent spouse. You know how hard that is? Well, do that. Like, that took 18-hour days for 5 years, for sure. Do that for 5 years and save all the money. And then in 5 years from now, you'll be so good and you'll be funded. And then you'll turn that savings into a legit sustainable business. And it only took you 5 years. This is how you need to think. It only took you 5 years. That's ridiculous to start a small business and find success in 5 years. But if you need to get rich in 5 months, you don't understand how the world works or how money works, or just you just don't you're not on the right planet. Once again, what's the key here? Low risk, ridiculous, sickening work ethic over long periods of time. That's sustainable. You see? Raw, honest truth. So I will apologize if I pissed you off or insulted you today. That's not my intent. I want you to succeed, and I know you're capable. And I know you're capable, but the way that the human mind works, you're self-sabotaging is most likely it. Or you're newer to the trading investing business. I get that. And so you come here every day, and we together, you will get better and better and better and better and better at your asset selection. And you'll get better and better and better at using your charts. But like, what should you be doing right now? Pound yen, pound dollar, okay, euro pound, silver, done. But that's just day trading. What about swing trading? Yeah, pretty much the same thing. Kiwi's still great. Okay, like, dude. With all this data, again, a neural network analyzing millions of data points in real time. Think about that. And so now you click a button and it's like pound yen, pound dollar, euro pound, euro kiwi, kiwi yen, sell silver. That's what's happening today.
I know that means you're bad.
Right? So
I
not
would be quiet. I'd be
the
like,
thing that should be holding you back.
and you, pendejo, pendejo, pendejo.
Right? Now, you go to the chart. Remember, these things already happened. So by definition, you are late. But that's not how this works. You're supposed to be planning tomorrow. You're like, well, pound yen's already up. Yeah? Is that important? What did I just show you? In a bullish trend, I want higher highs so I can buy tomorrow's higher low. Don't chase. Set up an ambush. So this is about tomorrow. Today's dead. Today is about taking profit on what we did yesterday. Today is about setting up tomorrow's trade. Now, sometimes tomorrow's trade is today in the afternoon. Sometimes it's in the Asian Open. Sometimes it's the London Open. Sometimes it's tomorrow's New York. Sometimes it doesn't happen at all. So the higher high is great. Okay, this higher high, pound yen, is fantastic. Now, let's look a little further out. Kiwi yen, let's look further out. Pound yen, very low conviction. I don't see a lot of yens on here, so you can filter it. But in any case, let's follow pound yen. So tomorrow, do we buy a dip? Isn't that the question? Yeah, of course. Okay, Oscar Mike, they're all on the move. So now we can then go to here. Pound yen, Kiwi yen. All right. Here's our Kiwi, and then we'll do pound. I don't even have pound here, but we'll do it. Okay. So I covered this yesterday. Just double check. Yeah. So here's what I did yesterday. Delete that. Okay, let me zoom in. I showed over and over and over and over again. Up, 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 down, down, buy. Up, 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 down, down, buy. Look at the, sometimes it's the pivots, sometimes it's the moving average. They're both right. Up, 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 up. We were here. On the target, by the way. Do you know what our trade plan was? We did that yesterday. So like now when it's reported to you, pound yen is up, and you're like, well, I missed it. Yeah, you did miss it. You're 15 hours late. Okay. It's not your fault because you didn't know. People don't teach properly. They don't train properly because they don't know how to trade. So what's the likely outcome in the next 12 to 24 hours? We drift up, we come back, and what I'm eyeballing in the future, okay, is where this is going to be. Where this is going to be. In the future, tomorrow. So what's the general plan? Just like this, just like this, just like this. Monday, Tuesday, Wednesday, we're already on Thursday. We're 50% done today, but your entry was supposed to be way back here. Basic pivot point strategy with basic moving average strategy. This is irrelevant. You don't need it. This is irrelevant. You don't need it. We just go back to what we were talking about. It's an uptrend. Buy a dip, bro. And I want you to see this and say, oh my God, he's right. Yeah, he set this up yesterday at the market close when it was still at a higher high. Yesterday, let me show you. We were here. This is 4 o'clock. The plan is buy a dip. You can do this. You can do this. You can do this. Sebastian says your future plans is transform this trading directly into a platform. If it's compliant. So we have another one to look at. Pound, right? Pound was today's beauty. The prettiest beauty queen today is pound yen. Comes and goes. This is just day trading, so it's just now. See, I don't even like it, right? Okay, but that's fine. Let's set it up. Day trading. Day trading bullish bias. Check out the 4 hour, check out the 1 hour. Okay, what is tomorrow's plan? Now it's kind of hard because it's what, 10 o'clock in the morning and we're talking about Thursday. Yeah, depends if we make the higher high or not. I want to look at it a 4 hour. It's a little out of position. That's true. Yeah, it's mediocre. A conviction of what? 2? Let's go back. Uh, A conviction of 3. It's working now. Does it have room to run? Yeah, maybe for a few hours. And then we fizzle out. So will it kick up there? I don't love it. I want to be lower. So this big move, let's analyze it this way. If I was using Fibonacci, here we go, which is a form of implied volatility. I want to be down here. If I'm using pivot points, which is a different form of implied volatility, it wants here. So it hasn't fallen low enough. When I go to the 4 hour, I want to kick it off to 21 and do a roll reversal. So to me, if I was on this time frame, I'm like, yeah, somewhere in that green zone, somewhere around the roll reversal, somewhere around the moving average. It could be here, but that's a pretty hot move. Doesn't mean it won't happen, but I should probably break it down into digestible pieces, meaning you could put half your entry here or half your entry there, right? Plan A, plan B, as I usually say. Okay. That's right, Denise. Yeah, that's next level. I don't want to overcomplicate it. Right? I don't want to overcomplicate it. It's like, yeah, we're in the second half of July. This is profit taking. We already know that, and people, that's the next level where we talked about it in June. That by the time we're in the middle of July, it's over. And we're going to run into profit taking. We're going to lose volume and volatility. It's going to fizzle out. It's going to drop through, flatten out over August, and it's going to get nasty in September. And then we're going to buy everything at a huge discount and run it out. At this point, I'm trying to deal with the fact that people missed the entire moves of the last 2 weeks, even though it was given on a silver platter. So the real question is like, why? That's the real question. Why did that happen? Why did oil drop from $110 to 60 and people didn't trade it? Why? Why has silver been falling day after day after day after day after day after day after day and people haven't been trading it? Why? The New Zealand dollar's been ridiculously strong day after day after day after day after day, but people haven't been trading it. Why? That's what we're fighting about. Yeah. It's the behavior. It's not the chart. It's not the analytics. It's not the seasonality. It's not the pivot points. Yeah, we have to have the confidence and the strength to get out of bed and do what needs to get done. Okay? Ridiculous, sickening work ethic and simplicity of trading strategy. Therefore, it won't break. You can actually do it. You can actually do what needs to get done. Have a wonderful trading day. See ya.
U.S. initial jobless claims dropped to 208K last week.
United States retail sales rise 0.2% in June to $768.6 billion. United States retail sales, year over year, declined to 6.7% in June from previous 6.9%.
United States continuing jobless claims registered at 1.805 mem, below expectations, 1.82 mens, in July 3rd.
United States retail sales ex autos, MOEM, below forecasts, 0.1% in June, actual, HOD 0.2%. United States retail sales control group meets expectations, 0.5% in June. Crypto today, Bitcoin, Ethereum, XRP run into resistance as retail buying cools.
Canadian dollar, Bank of Canada, hold and guidance shift, TD Securities.
Canada housing starts S-a-day, year over year, below expectations, 258K in June, actual 239K.
European Central Bank, hawkish hold bias, Rabobank. British pound, Bank of England hikes not seen bullish, BBH.
United States EIA natural gas storage change below forecasts, 45B, in July 10th, actual, 41B.
Mixed sentiment in global markets.
The Bank of Canada holds at 2.25% and removes hike language. Why the Canadian dollar could remain stuck. Eurozone energy shock risks for inflation, Rabobank. Ripple price forecast, XRP struggles build momentum amid subdued investor interest. United States pending home sales, year over year, down to D0.3% in June from previous 4.8%.
United States business inventories meets forecasts, 0.3% in May.
British pound UK GDP resilience with Q2 risks, TD Securities.
Euro pauses a 2-day winning streak as the US dollar steadies. European Central Bank. Rate hike risk returns with oil. ING.
Gold dives below $4,000 as oil-driven inflation fears keep Fed outlook cautious.